was the best performing asset in the world in year one, crypto spring, year two, crypto summer, year three, crypto fall, and macro spring, summer, fall. And then year four is the worst. And the worst is what scars people. And that usually happens June, July, and then it goes bananas. Of course, there will be corrections, and there will be sharp corrections. 30, 40% can happen. So we've got the largest wealth generating macro trend of all time, and it's still in front of us. Every time we had one of these massive drawdowns, because to market timing, this stuff is hard as hell. If I'd have just done that in the two cycles, I would have done 25 times better. I get asked probably the most from everybody, and I can understand why, which is, when do I sell my crypto?
As investors prepare for a bullish June and July, Raoul Pal affirms, the banana zone is here, and many are anticipating the bullish momentum for Bitcoin and crypto as we continue to see more all-time highs. As this momentum is building, the institutions are quietly positioning themselves, and Raoul Pal says everything is about to change. Bitcoin is sitting just above 106,100, up over 11% in the past month. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets. The former Goldman Sachs executive gives a portfolio update. He says the next phase of the crypto cycle is critical, and why in 2025 we'll see massive capital pouring into the space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Let's get right into the latest interview with Raoul Pal, as he gives his market prediction for the days and weeks ahead.
A cycle that happens every 4 years because everybody reset their interest rates in 2008 to zero and then made all the government debts in around 4 years, 3 to 5 years. I can't help you with timing the top. I know that it should be, by my work, sometime in summer to winter of 2025. When? Well, my liquidity stuff says, well, liquidity should peak in July of 2025. Is that going to be definitely right? Directionally, it's going to be roughly right, because it'll look like most other cycles. Generally, the cycles have peaked at the end of the year, but could that change? Remember, the last cycle was a weird one, because we had this huge run up, we had a peak, we had a huge sell-off, then we had another peak, didn't make much progress, and then it collapsed after that at the end of the year. So if you're the long-term person, wait for 2026 and go, yeah, I can't believe I can get more and compound more wealth. Get some cash ready for that and be ready. When everybody's panicking, you be the person to stand up and say, I got money. Because don't forget, nobody has money when you bloody need to. It was hard for me to find money because cash flows have gone down, because the economy's slow, all the other things that you have to deal with. But anyway, okay, that's one route. The other route, a bunch of you say, well, I want to take everything off the table. I don't want to deal with the stress of the down markets. That's fine too, right? We all need to understand our own psychology and our behavior patterns. And it's created this endless cycle, which happens to be the same as the Bitcoin halving cycle and the US presidential cycle. So we're faced with these cycles. And out of 3 years, crypto is the best performing asset in the world in year one, crypto spring, year two, crypto summer, year three, crypto fall, and macro spring, summer, fall. And then year four is the worst. And the worst is what scars people. And people want to know how to deal with this. My big macro thesis is this space goes from, let's say, $2.5 trillion today to, let's say, 10 to 15 trillion at the end of this cycle, depending how big this cycle is, to 100 trillion by, let's say, 2032. So we've got the largest wealth generating macro trend of all time, and it's still in front of us. Yes, the early days were super high returns, but it's still super high returns. So we don't want to fuck this up, right? We want to capture that. So a lot of people start thinking, well, should I trade out in macro crypto fall, try and sell that peak and then buy in the bottom, and then I don't have to go through the horror of the 75% drawdowns. It goes from 2.5 trillion to 10 to 15 trillion to 100 trillion. Everything in the middle is regulation. It's what about, what happens if somebody replaces the tokens that I've got? It's all of these things. They're all noise. And so anyway, I took profits and I was up 10x and I thought I was great. And then it went up another 10x in the next 9 months. 2017 was staggering. I'm like, oh, wow, okay. But I wasn't worried because I've made 10x. So I try not to have regrets about positions. And then it fell, and it fell 85% as usual. And then I'm watching the chart pattern looking for an entry, and it does this massive kind of wedge pattern, gets to the top. And I'm like, this is the opportunity because I know this chart pattern, the likelihood it's going high. And so I got in there and I massively sized up what versus my original bet. Maybe it's 6-7 times bigger than the first time I went in. And I've added since. Okay, so how did I do? Because I bought it low, sold it into a big rally in one cycle, then bought it. I'd ridden one cycle all the way up and down, rode the other one up, sold out, then rebought into maximum pain, the down 50% day. I then went back and looked at what happens if I just kept my original bet, which was much smaller. I would have made 5 times as much money by not doing anything. That kind of upset me a little bit because I thought, I was a macro guy, I traded it well. No. The issue being is this asset is in a logarithmic uptrend based on a network adoption model, Metcalfe's law. And so all of the highs are higher and all of the lows are higher. And when you put it on a normal scaling, it keeps looking like a bubble and then this. And when you look back on the chart, these little blips versus this because it's this gigantic trend. So what you start to realize is the drawdowns are a feature and a benefit if you think about them right. So this time around, I then calculated, okay, what happens if I just added my original size? Again, it wasn't the biggest bet in the world, but it was good enough. Every time we had one of these massive drawdowns, so crypto winter, because to market timing, this stuff is hard as hell. If I'd have just done that in the 2 cycles, 2013 and 2018, I would have done 25 times better.
Raul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raul has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
That was based around my liquidity cycle and where we are in this whole macro crypto summer stuff, and we were just finishing winter. So, and then I found I'd gone to my all-time highs in P&L way before the market had even got close to all-time highs. Usually, the back part of the year, there's usually a screaming pump into the end of the year. So my advice is use that in terms of time and not price, and take maybe a third off the table for lifestyle chips. Some extra savings, right? Take some money out of crypto land, secure your lifestyle, the things that matter to you. Right, now you've taken all of the pressure off. You've done it via time and not price, which is towards the end of the year, I'm going to take a third off. I don't really care what the price is because it will be up a lot. So I'm just going to take it off. And then now I've de-risked my life. So 2025, with the rest of the money that you've got, the 2/3 remaining, and you can say, okay, I'm going to take some off by about the summer if I wanted to take more off. Maybe you don't. Maybe you just run the rest because you've now de-risked your lifestyle. That's my favorite approach. But what I would have a tendency to do is if we do get a mega pump, then take another third off when that happens. If it doesn't and it gets stunted, it doesn't matter. You've taken a third off, you've protected your lifestyle, and then you can then buy some cash with that. If you keep that cash, you can buy the dip, or you use it to, as I said, for your lifestyle chips. But this way, you're now ready for whether it stops early. You don't care because you've taken your money off the table, but you're still in the game, right? That being in the game is the secular trend. That's the most important thing to me. But if it really goes wild, you take a bit more off and you can put it into the lifestyle chips bank. And then you've still got a position. Because if you don't have a
The all-new Whoop is here. Get the most advanced view of your health with blood pressure insight.
position in a secular market, I think you end up making suboptimal choices. So that's how, now you might not say a third, maybe it's 50% for you. It doesn't matter. What I'm trying to give you is an idea of not trying to nail the top, trying to think in terms of time zones and then how much lifestyle chips de-risks your life. I will absolutely buy the dip in 2026 because this trend is going to keep going. Remember, 2.5 trillion to 10 to 15 trillion. 15 is the pump. The 10 trillion should be normal to 100 trillion. That's the game we're playing here. Let the cyclicality be your friend. Understand that there are seasons that you can use to your advantage. We are just transitioning where we're about to hit crypto summer. And that usually happens June, July of the season cycle. And then it goes bananas. Of course, there will be corrections and there will be sharp corrections. 30, 40% can happen. Think of this as a longer term game. You'll make plenty of money if you stay with a secular trend in the big tokens and have a small amount to play in the other stuff.
Powell stresses this pattern is normal and necessary to flush out weak hands and reset leverage. He highlights Bitcoin's high correlation to global liquidity, which remains supportive, even during temporary liquidity air pockets. He believes the market is setting up for another strong leg higher. Similarly, Bitwise CIO Matt Haugen supports this view, pointing to a dip-then-rip pattern, where sharp pullbacks are typically followed by massive rallies, up to 190% gains historically. Both argue that patience, not panic, is key. The banana zone is alive, just misunderstood. As the momentum in the crypto market is building and institutions are positioning themselves, Raoul Pal says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. He says we're about to see massive capital pouring into the crypto space. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Pal says that this cycle will separate itself from its predecessors, as devalued fiat currencies will push more adoption into the crypto market and bring in more capital than we've ever seen before. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He recently shared his take on the current economic uncertainty, with tariffs and recession fears creating market volatility, that a major market rally is on the horizon. And that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. So we could see a sharp recovery in the next week,